Venture capital managers today are having better transparency for their portfolios by leveraging on technology. Now, this has helped them manage their exits and more. In the next session, we'll learn how data from Carta's platform provides key learning insights on how to achieve liquidity in the pandemic crisis. Sharing on this topic is Henry Ward, the CEO of Carta, and Will Kohler, partner at Lightspeed Venture Partners. Now over to Henry and Will for their discussion.
Hey, everybody.
Hey, everyone. Thank you very much for joining us. My name is Will Kohler. I am a general partner at Lightspeed Venture Partners. We are a global venture capital firm. We manage over $10 billion in assets. We invest in early stage technology companies across a variety of sectors. And we do so with a global orientation. We have offices not only in the United States, in China, India, in the UK, and in Israel as well. And we recently opened our newest office in Singapore, which currently has 3 full-time professional investors there. And we're proud to say we've made 5 investments in Southeast Asia. So it's very much an area of active opportunity for us. I'm joined here with Henry Ward, who's the co-founder and CEO of Carta. Carta is also setting up its Singapore office, by the way, which is something Henry will get into. Just a little bit of a narrative on how special a company Henry is the CEO of, because sometimes he won't go all the way and describe it and brag about it. Carta is a very special company that Lightspeed is a recent investor in. It started way back with a vision of building cap table software to really redefine equity ownership. And on that journey, it has become much more than just a one product company. It is now enabling venture capital firms, private equity firms, and VC and private equity-backed companies to manage their equity portfolio and liquidity, driving to the ultimate vision of providing liquidity to employees and really creating the distribution of wealth that the world needs. So Henry, enough of me talking. Most people in Silicon Valley know about Carta, but not many in Asia do. Can you tell us a little bit more about Carta?
Yeah, we're the best way to think about Carta is as a dematerialization company. And what I mean by that, I'll give you a couple of examples. In the 1970s, Richard Nixon removed the U.S. from the Bretton Woods Agreement, which is the monetary system set up in post-World War II. And they removed the dollar pegged to gold. They dematerialized the dollar. So you no longer didn't have to carry cash or have gold reserves. You could create money just by updating the ledgers in the Fed Reserve, which back then was the 1970s version of the cloud. And that created the current financial markets we think of today, which is credit cards, the ability to manufacture credit immediately, ability to have forex markets, the ability to freely let dollars float against other currencies and exchange those things. You don't need a briefcase of cash to go overseas and buy something anymore. That was the first great dematerialization, where they moved all of cash into the cloud, which were ledger books. The second was in the 80s in the United States, where they moved all the publicly registered securities out of paper stock certificates and into the Depository Trust Corporation, which at the time, the cloud then was a bunch of mainframes in New Jersey. And if I sell you, Will, 100 shares of Google stock now, those are the databases that get updated. And it was after that created the financial infrastructure that exists today, where we have markets and exchanges and high-frequency trading. All of that was predicated on taking shares of public stock, taking them out of paper, and putting them into the cloud or a database. We're doing, in 2020, we're doing what we think of as the next or third great dematerialization, which is taking everything else that's in current paper and contract law, which in our universe is primarily alternative assets. So venture, private equity, oil and gas, real estate, and pulling all of that into the cloud, and then enabling services that built on top of that cloud of shares and assets. So obviously we're best known for cap table services for companies, as you mentioned, and companies can now log in and see a real-time capital structure of their business in Carta. Venture funds now, SOIs are being loaded up into the cloud. They're not being tracked on paper and spreadsheets. So venture fund customers can see a real-time SOI, and then the LPs that invest in these venture funds can look at and see real-time reporting. And so private market infrastructure through Carta is starting to look more and more like public market infrastructure, where you can see everything in one place. And that's what we do.
And this, of course, leads to the power of providing liquidity in the form of your latest product and offering, Carta X. Can you tell us more about it? And what are the problems that exist today in private market liquidity? And how does Carta X solve those problems?
Yeah, so what's happening in the US and is starting to happen in the rest of the world is there's an imbalance in the private markets of supply of capital and demand. So there's so much money trying to get into private markets today that there just aren't enough balance sheets to accept it. There's just not enough companies that can accept all of that capital. And so the only way we could solve this problem is by creating turnover, where shares can trade instead of investing in a company on a primary and that cash sits there and that investment sits there for a decade. We can create secondary where that cash can turn over and those shares can trade sooner. In the public markets, the average share is held for about 10 days. In the private market, it's more like 7 years. The average share is being held. So we can move that duration of ownership to be shorter and create more turnover, more secondary turnover in the private market. We can start accepting more of that capital and give more exposure to asset managers and investors to private assets, where today, because they're so constrained, only a handful of companies can take this capital. So much capital sitting there on the sideline trying to find ways to get exposure to private assets. And so what Carta X is it's the first private stock exchange where private companies can list on Carta X. They can allow their shares to trade, where Carta X will make a market in those shares, and investors can buy and sell those shares on Carta X. And if it works, we're launching in January with our first listings. And if it works, we'll be able to accommodate more and more of this capital that comes in. More of the capital can get circulated, turned over, and then reinvested back in early stage companies. And we should see a much more dynamic private market.
And Henry, there are secondary marketplaces today in various forms that some folks may be familiar with. What's different about Carta X ultimately?
Yeah, so Carta X is a true listings venue where the customer, the corporation or the issuer is our customer. So the issuer decides how their market trades. They're in charge of the supply of stock. They're in charge of who's allowed to buy. So they have complete control of it. Other marketplaces tend to be more like a Craigslist, a bulletin board, where buyers and sellers can post what they have, but then they have to consummate a transaction. Carta X will interestingly be the only T+0 equities market in the United States. Because we've been able to build all of the infrastructure ground up. We didn't have this legacy of T+2 that was carried over from the 80s, where it actually took 2 days to get the money to somebody after you bought their shares. So this will be a T+0 equities market that's clears and settles entirely on one platform. Where most of the other secondary markets are really just broker platforms where you can list what you have and list what you want to buy, and then you have to find a way to consummate your own transaction.
And Henry, what are some of the other benefits? And for our portfolio companies, for instance, this could be a phenomenal tool for employee retention. Just the next generation of expectations of the workforce. How will Carta X help position companies, CEOs, investors to present a great work environment for employees?
Yeah, in the 80s, a lot of people don't realize this, but in the 80s in Silicon Valley, nobody got stock options. And then the traders ate the team that started Fairchild Semiconductor and eventually went on to found Intel. They started giving equity stock options to engineers. So all the engineers started to come work for them, and then everybody else had to follow suit to win in the talent competition. And so now, today, everybody, including the receptionist, gets equity at a tech company. It's unheard of to go work at a tech company. And we sit around looking at the 80s going, why would somebody go work at a tech company and not get stock options? That seems crazy. I think the world, it's interesting. There was a stable equilibrium where nobody got stock options. And then there's a stable equilibrium where everybody does. But you can't live in the middle. And I think that's what's going to happen with liquidity. That if Carta X works, the best companies will start providing liquidity to the employees and saying, come join. And we do this at Carta. We're the first listing at Carta. We've done annual liquidity events for the last 3 years, and now we're going to do quarterly liquidity on Carta X. And we recruit employees by saying, look, come to Carta, don't work at that other startup. Come to Carta because you'll get a good salary, you'll get stock options, and you'll get the opportunity to realize the value of those options via liquidity through Carta X whenever you want, every quarter. Instead of going to that other company where you get paper stock options that you hope maybe one day will be a lottery ticket for an IPO. And I think if the best companies start doing that, they'll start winning the talent war because it's a much more compelling pitch for executives and employees. Employees will start to migrate to those companies, and then everyone will follow suit. And I think 20 years from now, people will look back at today in the dark ages and say, could you believe people used to go work at a company and they just had, quote, paper options? Like, you couldn't actually sell these things unless the company went public, and like 200,000 companies a year are started every year, and 50 of them go public. Like, that's crazy. And if the world flips, I think there's a stable equilibrium where there's zero liquidity in the private world, and there's a stable equilibrium when everybody gets liquidity. I don't think we can live in the middle.
It's an incredibly exciting reality that is upon us, and I know it's been a vision of yours since day one of starting Carta. Just to remind what's something that you mentioned, Carta will be the first issuer listing on Carta X in January 2021. What about after that? If people are interested, when are the next cohort of issuers coming out?
Yeah, so we have about a half dozen that are lined up and that have scheduled dates. So we're targeting a new listing every quarter. The listing requirements, if you're interested, we'd love to chat with anybody who's interested. You have to be worth about $1 billion or more. So there's some liquidity requirements and financial requirements that are in there. But if you're in that $1 billion plus category, we're happy to chat and find you a scheduled date. It usually takes 3 to 4 weeks to onboard and go through legal diligence. So it's a much faster path to liquidity than going public. Going public, it's a year and an S1 filing to get public. Carta X, it's legal and financial diligence, about 3 to 4 weeks of onboarding effort, and there you go.
All right, switching gears a bit. Carta's setting up an office in Singapore. Why?
Yeah, so we, one of the things that's really interesting about what we're doing is, we work in the private space. So everything we do is take things that are in paper and contract law, and we move it into the cloud and make it structured economics. What's interesting is we can do this in the United States in private assets, but we can do it around the world. In 1933, when the U.S. passed the Securities Exchange Act, they moved all the publicly registered securities in the public world, but they left all the private assets in contract law and paper. And so we're going around the U.S., vacuuming up all these paper assets, but we can now do it around the world and put them all in the same database. So an investor in Singapore could access securities in the United States and vice versa on one platform. It's really counterintuitive. By definition, a public stock market has to be regional. I can only buy US-based stocks trading in the US. And if you're in Singapore, you can only buy stocks on the SGX. We can't go cross-border. By definition, a public stock market has to be regional because it's regulated within those boundaries. But a private stock market can be global because it's all in contract law that's become digitized. And so we've always had this ambition that a private stock market didn't have to be just US-centric. It could be global. And so we thought a lot about it. We've been operating for 7 years, and we've scoured the world trying to find where is the second place after the United States. Where do we go next to bring Carta to the rest of the world? We looked in Europe, we looked in Southeast Asia, we looked in South America, we looked everywhere, in other parts of North America, and we decided on Singapore because it has it's got some really interesting fundamental characteristics that we really like. So one is the Singaporean government is so supportive of the venture ecosystem. We're a company that loves founders. They're creating more and more founders, and more technologists are coming out of Singapore. They're investing huge amounts of capital into this ecosystem, and so it's perfect for us to embed ourselves in this ecosystem. But it has this other really great attribute, which is the path from two founders in a garage to Gojek or Grab in Singapore is faster than anywhere else in the world in Southeast Asia. And the reason is that if so much of what Southeast Asian startups do is consumer. there's so many of these companies, small companies that are trying to get off the ground. But when one of them hits, one of them gets product market fit, they now have 300 million Indonesians and a whole bunch of other countries to sell to so quickly that they go from two founders in a garage to Gojek and Grab, billion-dollar companies in 48 months or less. It's really mind-blowing. It's phenomenal what happens in Singapore. And so our thesis is, let's go get all these companies and work with them when they're small, and we'll have this net. We'll capture all of these great founders, and then the founders that make it, that quickly go from zero to $1 billion in valuation or more, we can now put them on Carta X. And these companies can now access US liquidity pools for both primary and secondary trading, where now if you're a $1 billion plus company, there's very limited access to capital that you have in the ASEAN region. It's not set up for venture or tech type liquidity pools. And so we can now bring that liquidity to Southeast Asia and then start recycling that liquidity and bringing more liquidity and starting to help more companies raise capital and so on. And that flywheel spins. And when we worked with the Singaporean government last year, when I came out to visit and talk about what we wanted to do in Singapore, it very resonated how they think about building their venture ecosystem and how they're investing directly off the government balance sheet into venture-backed companies, and how we can come in and help them accelerate that flywheel and create more and more founders and startups.
Yeah, and I mean, the growth trajectory that we've seen in Southeast Asia resonates. We're fortunate to be investors in Grab, so that it's very true just how quickly to scale these companies have gotten. Maybe talk a little bit about your market entry strategy in Singapore.
Yeah, so we very much think of Singapore as a long game, and the strategy is very simple. We're coming with our cap table software that we're giving away for free, because so many of the startups in Singapore are small, early stage. They're capital constrained, and that's great with us. I remember being a capital constrained founder. I love free software. So we're giving away free cap table software in Singapore. We're also offering fund admin services to venture funds, which won't be free. We do venture back office administration in the US, and we're now going to do this in Singapore. And there's a very much a 1 + 1 = 3 effect, where, because if we own and can run the scheduled investments for the venture funds, we can help manage their equity stakes in these companies. And if we have the cap tables of the companies, we can help manage the SOI for the venture funds. And so these things work very well. The fund admin business for venture funds will subsidize and pay for the free software for the portfolio companies. So it's all part of the ecosystem. And then we'll just get to know the next generation of great founders in Singapore through this, and support them the way we support US-based founders. And so we see the life cycle of these companies, and these companies grow on Carta as they get larger and larger and go through, mid-stage and late stage and pre-IPO. We can help them along the way. And there's all kinds of services where we can help them: valuation services, accounting and expense accounting and stock option type services, and then of course eventually liquidity type services. And so that's the strategy. Is we want to help all of the two founders in the garage, and then as soon as we can, and just grow with the founders.
I'm happy to hear you're charging for the fund admin product, because I know as a customer, Lightspeed would have been really concerned if you started giving it away for free elsewhere. My partners would have. So when do you go live in Singapore?
We have boots on the ground now, and then with our first local employees, and then we're moving a small group from the US to Singapore. I think they just got visas approved for January. So we will be in market in Q1.
And if there are companies or VC funds who are listening to this and in Singapore that want to work with Carta, how should they move forward with you?
Yeah, totally. They can email me for sure at henry@carta.com for sure. But we have a whole team that's in place, and we'll be reaching out and visiting a lot of the venture funds as soon as the vaccine's out and we can move more freely. And I think the best way to get to know us is through the companies. If the founders, everything depends on the founders. If the founders think that we're a helpful service provider to them and can help them build their companies, then we can be net value add to the ecosystem. And if not, then we won't be. So the best way to get to know us is to have founders work with us, get us let us help them set up their cap tables and track all of this. And then from there, see if we can help in the back office of these venture funds as well.
Yeah, and I just have to say for those funds that are listening, ultimately Lightspeed became not only a customer but an investor in Carta, because we one day looked down and realized that 40% of our portfolio companies were on Carta cap table software. And these are the inherent network effects we all start to realize in Carta. And it just made our lives so much easier to now view through Carta the lens that our portfolio companies, their cap tables, and then building fund administration software on top of that really starts to centralize all the insights and management of portfolio investments. So I think, Henry, this is a very deliberate product strategy that you've had. And when you launch a new market, I can't impress enough just how you've thought through the ecosystem, ultimately with Carta X as the end goal. So congratulations on all the progress so far, man.
Thank you. Yeah, we're really excited about landing in Singapore. We spent a year and a half working with the Singaporean government on how to come in and help and be helpful, as they've been spending a lot of time thinking about how to build out the venture ecosystem there. And what's so exciting about Singapore right now is the venture ecosystem is still young and nascent, but growing quickly. And I feel like we're entering it at just the right time to be hopeful.
And Henry, maybe just to, oh, sorry, was there a question? No. Henry, maybe just to impress, if I'm a VC fund, if I am a portfolio company, and I reach out, what are the benefits long-term of being on Carta that you may not get from other cap table software, other traditional fund admin offerings, whether they're just services?
Sure. So I think for one, it's a much cheaper, faster, easier, simpler way to manage your cap table. Think of it as like, should I manage my book, my finances with Excel, or should I just use QuickBooks? So just use Carta, to manage the cap table. It's super simple and easy. But I think where this goes is Carta becomes, via Carta X, the platform for primary capital raising for earlier stage, and then secondary for late stage. And the reason is that Carta X and liquidity is all about making a market for your asset, for your issue. And so if Carta X is able to help companies in Singapore make markets, find buyers that are regular buyers and long-term holders of their stock through Carta X, they now have this market that they can sell primary or their treasury stock into and raise primary when they need to. The way that capital raising is done today, even in the United States, it's really, Will, you know this better than I do. It's really shocking. I'm amazed that 2020, I still raise money door to door. Like I just walk, I live, me and you live really close together. We live a few blocks from Sand Hill Road, and I literally walk from office to office with a presentation saying, hey, would you give me money for this presentation? And I think that will change. I think financial markets and venture will mature to the point that I think there will always be a touch and feel piece of this, especially in the earlier stage. But for many of these later stage growth investors, you shouldn't have to do this door to door. There should be an auction that's run where everybody gets the same information and they bid on your shares and you have proper price discovery. I think one of the things that's most frustrating for entrepreneurs is when they're raising capital is they have less information than venture funds, because you see all these deals that are happening. I only see my own deal, and I'm at a disadvantage because I can't do proper price discovery. And for me to do price discovery, I just have to go knock on more doors, and that takes a ton of time to do. And so I think one of the hopes that I have is that one of the problems we'll be able to solve for founders in Singapore is we'll help them get better information and then access to better quality capital that they can do price discovery on. Because right now it's really tough in Singapore for founders to do that.
And in the event someone is in the audience and is thinking, well, Carta's actually going to issue, how can I get in on that?
So unfortunately, I'm not allowed to, for SEC rules, I can't sell my issue. We're going live on Carta X. all I'm allowed to say is like, we're a great company, but I can't hawk my own stock. It's funny. It's by SEC rules. Like, I can hawk other people's stock, but I can't hawk my own. It's funny that way.
Can I hawk your stock?
You can, yes.
Okay, I highly recommend it. It's one of our best investments at Lightspeed. Oh, sorry, I thought we had a question come in. Henry, what is next after Singapore for global ambitions?
Yeah, so it's a great question. We continue to look around the world. India is very interesting and can be and you have an office there. It's a fascinating ecosystem. We're watching it super closely, and one of the theses on Singapore is that if/when we're ready to get more aggressive in India, Singapore can be a launch pad for that. So India is definitely top of mind. As always, you can't talk about global expansion without thinking about Europe. And there's kind of UK, Western Europe, and Eastern Europe is how we think about it. UK is, if we end up in Europe, UK is probably the entry point. Continental Europe gets really tricky because there's so many different regulations, whether it's French or Belgian or Denmark, and these ecosystems are small and patchwork, and it's hard to get a structure that works across the continent. And any one country, even France, is probably too small a market to try to do organically. So UK, we look at the problem with the European markets is they're bigger than the Asian markets, but they're not growing nearly as fast. And so it's this question of, do you want to take on something larger but with that less potential, or do you want to get in on the ground floor on something that we think can be enormous in 5 to 10 years? Another one that we think a lot about is China. And China is an interesting problem for us. We segment it in two markets. So we think of offshore and onshore, or even more simply like US dollar denominated versus renminbi or RMB denominated investments. We're looking very closely at offshore. Onshore, we feel like we don't understand the market dynamics nearly as well. What's happening in China is that the onshore and offshore division is becoming more blurry. So many of these funds are starting to do both type, both USD and local currency type investing. More and more, we're seeing, companies that would have been that are really American or Cayman Island-based companies that are incorporated and raise capital outside China, but just operate in China, are now also just incorporating and operating within, China. And so we're trying to figure that out as well. So we're watching Hong Kong, obviously, and then China very closely.
And with the success of Carta X, I mean, truly transforming private market liquidity, just a bold question, what's the future of financial markets? Public.
Yeah, I think it's a great question. It's something that I think about a lot at night when I can't sleep. I think there's three outcomes that happen over the next few years. So one is we launch Carta X and nobody uses it, and it just goes away. And we're not the first to try to launch a private stock exchange, we're just the next one that failed. Hopefully that's not what happens. The second outcome is we become the aim, or this kind of the lower end marketplace for public markets. So we're the aim to LSE, we're the aim to, the Carta X to NASDAQ or Carta X to NYSE. And we either become a secondary kind of lower end market, or more likely a transition market into the public market. So companies that are 2 to 4 years out from going public will say, let's list on Carta X, we'll do a little bit of liquidity before going public, and then we'll go public. And so they just churn off. They're only with us for 2 to 4 years, and they churn out. And so we have a moderate business, as a truck stop on the way to public on IPO. Then there's, if I did bear and then base. So bull case is a third option, which is companies list on the Carta X and then realize that they're better off staying private and liquid than going public at all. And the reason that they would think that is twofold. One is because us private company CEOs have this great advantage over our public company cousins, which is we get to pick our investors, like you. Well, right? We get to decide who invests, and one of the things that's so powerful about that is that I can pick investors that match the duration of my business. Right. So, Will, you invested, and I told you, we talked about this. I said, Will, I want you to plan to hold your position for 8 to 10 years. What we're building takes time. And you're okay with that. And all our investors are okay with the duration of how we think about the world. But I was public. I might have some investors that are, like T. Rowe would be, long term. But then I have also people that are day trading my stock, and I'm trying to balance all these different constituents. So that's one, is I can pick capital to match my duration. And then the second is I now have an advantage over my public company CEOs, which today I'm disadvantaged. And that advantage is my stock is not commoditized. Right. I think one of the greatest tricks the devil played on founders, and when I say devil, I mean Wall Street, Kaiser Sose, was they convinced us that our stock should be commoditized and that the bank should just treat it like a bunch of numbers and it should trade on a ticker in CNBC. Whereas me, today, for a private company, and I'm recruiting an executive, and I'm competing against, say, Salesforce, I can say to the executive, come work for me, and you'll get Carta stock and Carta salary. You believe in the Carta story, and I know you believe in the Salesforce story, but if you go work for Benioff, you can't get access to Carta stock. But if you come work for me, you get Carta stock and a Carta salary, and just use that salary to go buy Benioff stock, and you get exposure to both. But the only way you get exposure to Carta is to work for me. And I think that will be this idea of being private and liquid is competitive advantage against public companies. And the best founders will want to stay private and liquid. I think if Carta X becomes not the pit stop to going public, but the end stop, it completely changes the way public companies work. And 20 years from now, there are more companies going private than going public today already, and they have nowhere to go right now. And I think if we give them a home, public markets start to go the way of the railroads. I think they just start to disappear.
And a question that I've always been asked, and I'd love to ask you in this forum, is where has the timing of Carta X, now that it's going live, where does that stand when you originally thought, hey, with this company that's going to do cap tables as the wedge to go unlock liquidity, how's the timing match up to when you originally got started?
In my seed deck, I published this in 2013, my seed round deck, I said, we're building the NASDAQ of private markets. And I really thought we'd do it in 2 years. Like 2014 or 15, we'd be up and here we go. And it took seven long years to get there. I didn't realize 7 long years in a $3 billion software company just to have the right to build an exchange on top of that infrastructure. I didn't realize how much had to get built. But it's good things come to those who wait. It's been almost a decade in the making that I've been waiting for this opportunity. So it's not many people can say this. I'm so lucky. It's literally a dream come true.
Well, it's been a privilege to be on the journey with you, Henry, and I can't voice enough excitement on very few companies have the ability to succeed with their first order product, and because of the success of that product, earn the right, as you said, to go do something as transformational as enabling private liquidity in a marketplace format. So best of luck. And I'm really excited to hear about Singapore as well, because we're in there as well, and it's a phenomenal market, and we're psyched to be here. So want to thank everyone who listened in.
Yeah, thank you, Will. Thanks, everyone.
Well, we hope venture capital managers will benefit from more data transparency in order to help them make investment decisions. With the insights shared by Henry and Will, we also hope this helps others in the investment community figure out what tools are needed to give them more clarity in these critical times.